Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Thanks, Marty. And how about YouTube? Okay, great. Thanks, everybody. Well, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. This stream's about the business of trading. It's about understanding how the market works, why it does what it does, and how at times you can get in alignment with it using structured trades as a template in order to get aligned with the market. The business of trading is very much a gaming business. We basically overlap trading on top of the chassis based on how casinos operate. Casinos are in a 100% random environment. They only play games that have a statistical edge, and trading is very much the same kind of business where we should only interact with the other participants when we have a statistical edge. The job of a trader is to know where those edges are when they show up, and to also accept we're in a 100% uncertain environment, which is quite contrary to where we are comfortable operating. Because of the uncertainty, most retail traders are seeking certainty, and they seek certainty looking for confirmation and loading indicators and timeframes onto their charts in order to fulfill a primal need to avoid the saber-toothed tiger, not to be wrong, not to lose, of course. And the logical solution is confirmation and certainty, and unfortunately, you're in an environment where it doesn't exist. So if you're trying to solve for something, but that's not the environment you're in, maybe then you need to solve for something else. Maybe you need to solve for edge. And the business of this business, in my opinion, is a business of edge. So that's what the Trader Lab is about. The Trader Lab is a community of like-minded traders that come together to leverage their collective experience. There is no cost for Trader Lab. There is a library of webinars on this process. I stream every day, and you're all welcome to visit the Trader Lab. And there is a link in the bottom of YouTube if you are so inclined, and there is no cost. Use the link in the bottom of YouTube, Eli. You do need to confirm your Discord user name, and you'll find Trader Lab and a lot more. And there is no cost. So let's get going. Let's take care of business. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. Okay, this is the RTH Open. Now, before we get going, we, of course, gapped, and we are in a, you might say, bull market at the moment, or bull run in the intermediate and the higher time frame. That puts a couple of things on the hit parade for us. In the Trader Lab, we work with targets, and let me make sure I got this one here, 36. Let me just see, 30. Yeah, this is our current target coming up. It's 36. I will show it to you. Actually, let me just make sure I've got everything here. This is the auction, and what the auction is the market's job is to try to figure out what something is worth. And it's going to rotate to what's too high, what's too low, and then it's going to seek equilibrium. The other part of this thing is if we find too low, the market has a tendency to come back and check what it left behind previously. And that was up here. So right now, the target on the longs that we have on, and I'll show you, these trades so you can kind of get a sense of how this might work. I have not had a lot of trades today. They're just, the market offers, and if you're prepared, you do your thing. So these are, this is the target though, 36. Now, if we can get above 36, there is more upside. Let me just see where that is at. Well, there is a possibility that we take out 48 and get to 54.50. That's a bit of a reach, but I have to say it's always possible. And let me see, and here is the 54.50. So we have that, and then we have, let me just look here, 48. 48 is a key level. This is based on, this is the last swing high, and there's stops up here. So we just want to make a note about that. So put that on your chart, because that's fuel. And that's from FOMC day. So if we get over 48, first of all, we got to clear 36, then we have 48, and then we have possibly 66. But we'll just work with this at the moment. Okay? So we want to remember this. Let me just make this so we don't forget it. Okay. Just want it to be there. And I'll keep this so I know it's an important level. So let's get into RTH Open. If you have questions, please post them. Do my best to get back. If I'm not able to answer your question, you can use the link in the bottom of YouTube. You can go to the Bookmap Discord Trader Lab community. There is no cost. It's a 24-hour chat. Plus, there's a lot of additional education going on. Plus, the members in the Trader Lab, all levels of activity, and also time in, from new developing traders to our senior trader has over 50 years. I have 45, both professionally and otherwise, sitting out here with you. So let's go take a look. Now, the idea of the market is, the purpose is to try to figure out what something's worth. And obviously, lately, the market thinks it needs to go higher for whatever reason. And it tends to go to look for what a level that might be too high. And since we're galloping away with gaps, and the market is just really on a rip right now, they target up there 36, 48, 54 are pretty important targets. If we get above that, we're looking around 64. But since we're day traders, we just need to concern ourselves with the current opportunity. So this is the RTH Open. Now, I looked at this and I saw a couple of things. Now, one of the things you'll learn in Trader Lab is market mechanics. What the market tends to do, and it can do anything. So first of all, we're in an environment that's 100% uncertain. The other part of this is when you get a higher open or a gap, very often we see something called responsive selling. That means that longs that are currently in the market take some dollars off the table, so they respond. And so by responding, we get a downside rotation. So in the Trader Lab, you would anticipate this. Now, it's not predict. Remember, there's a big difference between prediction and anticipate. In the Trader Lab, we anticipate behavior because we understand the auction mechanics, okay? So let's go take a look. This now is responsive selling. And in the Trader Lab, under different conditions, or if you're a short-term rotational trader, this is a short. So I'm going to show it to you, but I also have to show you the long. So we're going to look at a couple different things. So here we go, RTH Open. Passive side is here. This is the developing volume point of control. Right here, no clue. It can go up, could do whatever it's going to do. So I see my sellers here. My seller is here. Let's just watch. My passive buyers were over here. and this is just before RTH open, so I have support here, I have resistance here, break here, buyers are here. So right here, it looks like the buyers are here, and I know the sellers are here. I'm above this seller, and if I get above this guy, I can go higher. So right now I'm thinking we're going to go higher. Now that's not a trade for me. It's just I'm navigating and trying to read the auction. Now right here, I get what's called VPOC migration. I did a special webinar on this, and it's in the library in the Bookmap Discord Trader Lab community, and you guys might want to watch that one. It has to do with early development when you have nothing. Basically, when the market opens, we have nothing other than yesterday's RTH auction and then the ETH, which is the previous auction. This is the ETH high, so we have a high probability of getting up here, over 90% probability, and we have probably a 70 or 80% probability of getting down here. Past performance, not indicative of future results. The specific statistical probabilities are in the Trader Lab, and you can download them also. So too high. The sellers are below the buyers now. Buyer is here, seller, seller here, buyer here, seller was here, buyers are here, buyers are above the seller, buyers in control here, breakdown, VPOC migration suggesting lower. Now this is either a short in the Trader Lab or you're just hanging out. This is the test, too high. This is a short. Now it's not a short unless you're a counter trend trader. So here we're coming down. Overnight volume point of control is the first target if you took a short here. Now for me, I don't trade for 3 points. Not intentionally anyway. In fact, let me give you some statistics just because. The probability getting to the overnight volume point of control is about 80%. That's this. And you have to bet these for yourself. Taking the overnight high is about a 76% probability in this condition. Taking the first hour's high is a 68% probability. So, and then filling the gap, probably about 63%, So, but under these conditions, perhaps not. So the first trade is to here. So let's watch the behavior. Because of statistics, not prediction. There is no such thing in trading. So now we have a level down here, and this is called a low volume node. Comes from a higher time frame. It is an outside edge of a distribution. All this is available in Trader Lab. Now we come here and we start chopping. Now for me, I'm looking at this liquidity. I have a level marked here, and there's no precision in levels. One of the joys of trading is it's all random and there's a lot of slop in it. So in the Trader Lab, when we talk about levels, they're areas. So when we come to an area, what I do is I'm not going to trade in between. Right here, I was thinking if I test this and I get a long, I'd be getting long from this area to come back here, which is my retail price at the moment, and then up, because that's my orientation. I want to be long unless I'm a short-term trader taking a scalp, which, if you want to do this, that's up to you. You can. Now, this is called VPOC migration. Now, this is going to get advanced, so just follow with. If you have questions, post them. I can't see them directly right here, so I have to come up and look at them. This is called a variable high volume node, and I made all this up. In fact, I made this process up when I did a long time ago. This is the retail price. Now, if there's more volume here than there is here, that is suggesting perhaps this is too high. And as shoppers, this is the new retail price. But there's another piece to this. So I'm going to label this because it's the new volume point of control. This is my retail price. So now I'm sitting here and I'm going, well, what are we going to do now? Right? Don't you ever ask yourself that? Well, I know right here, if I know that's too high, and if this price here is too high, I can push off it and continue lower. I do have level, but I break high. Now, when I break high, if this becomes too low and I come across, then I'm coming back here. Let's see what it does. This is microstructure. It is too low right here. Here's how we can tell. I'm reading the order flow. Sellers are here. Seller is there. Buyer is here. The sellers are there. That's why this delta didn't go anywhere. And we break below it. Sellers are in control here. Buyers are under the bus. You can see this in the order flow. Now we have buyers here. And I don't know. I got a buyer here. I'm below this. I got buyers here, but I don't know. Buyer is here. So this buyer is above the seller. This buyer is above the seller. And right here, no clue. Buyers are here. Sellers are here. Buyer, buyer, seller, seller. Right here is absorption. And then there's the sellers are here. So I've got sellers here. I got my buyers here. And for all I know, we're going down. What happens? It changes. The buyers are above the sellers. This is a buy trigger in Trader Lab. I'm also above the volume point of control. I know if I'm above it, I can do something called mean reversion. Let's watch what happens. So this is the first long I have in the Trader Lab. It's a structured trade. And the idea is to get scaled here. Now, I also know the context is up. And chances are this was only the responders, the responsive selling, and we're going to take the opening swing a high up. My job is to get risk neutral. For me, this is just a structured trade. So I just kind of do my thing, and I follow process. Notice the behavior at the location. There's reasons this happens. If you're in Trader Lab, you will understand it. You will understand how the market works. I don't use any of these standard canned indicators that most retail traders use. I don't do it. Been there, done it, more than I care to think about, and many derivatives, including trading systems. I don't. This is what was too high. That's why if I'm long, I'm scaling, and now I'm holding, and my target is 36 on the top. So let's see what it does. VPOC migration, too high. Can you see why I would take a scale here? Is it coincidental? And I'm going to say, well, maybe that this is too high and I get my rotation. You see what I'm saying? So if you're in Trader Lab, you know what this is and you know you would scale or exit. It all depends on your plan and how many contracts. So now I get my rotation. So I have choices now. I want to be long, and I have my ETH high, which has over 90% probability. Would I get out here? No, I would scale. So now this is my support. So if I stay above this, I'm okay. And my next job is to go here, high probability. If I can get above there, then I have the potential for the first hour's high, IB high, and then I have 36. So that's how I'm trading this thing. So let's see. This is support. There it is. This is another Trader Lab structured trade. Right here is a long, if it's in your plan. And then this is your resistance. Let's watch it. So we have a long here to here, Trader Lab structured trade. We have this as a long to there, Trader Lab structured trade, and then we're looking for this. Let's watch the trade. Next target is here. So you saw the short, which is up to you. Then you have longs, longs, long to here. Remember scaling to there, to the ETH high, next scale, and then one more or whatever. And there's other entries in here, and I'll show you the next one. There's not a lot going on here today, guys. So let's look at this. Any questions so far? Let me, so we got this, ETH high, and now we have more coming. How are we doing in YouTube, guys? Please give a like if you're finding this interesting. This is the Trader Lab. You're all invited. You have a engraved invitation, and you can use the link in the bottom of YouTube if you're inclined. So let's keep going. There's not a lot of trades here. So the idea of trading is not action. I mean, if you want that, there's the casinos. They'll give you the cocktails and the ticket to the buffet. The idea of Trader Lab is to try to maximize your opportunity with structured trades, help you develop the confidence to overcome your fear. And by the way, we're all fearful. Don't worry about being fearful. It's natural to the environment. The thing you need to do is learn to manage that fear and accept that you're in a 100% uncertain environment. The fear is generated by what we call uncertainty. And when you start using terminology, and we all do, I want to be more certain. Well, what does that really mean? I want confirmation. Why do we need confirmation? Because we don't want to lose, of course. Well, what else does it mean? We're fearful. And if you're in an environment that's 100% random, how can you not be continuously fearful all the time? And how can you not question that a trade will or will not work? And is there a better, so the answer is derived outside of trading hours, not here. You know what you'll do when it shows up. So we know what we will do in the Trader Lab. We will be fearful because that's a human nature. But in the business of trading, we have to accept our fear because the environment we're in generates fear. And that's just the way it is. If you're going to be in the trading business, you have to learn this. Now, we had a report at 9 a.m. came out, and we get a big sweep. Well, the sweep sets up a long also. Let's look where it goes. I know you're going to look at this and go, oh, this is all wonderful, Well, we have the mid, and we have a sweep. So all of this, this is just blow everybody out. But if you're in Trader Lab, we have a couple of things. First of all, we have a variable high volume node here. We also, on this bomb right here, we come right to the mid. Now, subject to how you manage your trade, you might get taken out of it on this. Okay. And if you did, then you have to find another way back in. If you're managing this thing further away, then you would not be impacted by this. So let's assume you were, though. Let's be, like most of us probably, depending on your plan again, you would see this and you'd either jump out or you'd get taken out. So this liquidity comes into the book right before this happens. Isn't that interesting? This would come in here and basically stop this. So how did this happen? Do you think somebody might have orchestrated this maybe and just swept everything out? Because this is in here before this. It's one of those interesting phenomena. And order flow helps you see this. I see where I'm about to get my next target here. Just looking up here. This is an opportunity for a long, but if you can't get it, that's okay. There's other ways then. So let's assume you're taken out. Okay. And you're, grumbling and everything else that happens to us. Now you're feeling FOMO and it's leaving without you. So let's watch. What do we know about this right here? This is what's called a low volume node. I'm gonna mark it. And you'll see why it's important. The auction is made up of something called distributions. And all a distribution is a consolidation. And when you start looking at these things, by the way, this is the IB. And the IB has over 90% probability it'll get taken out. That's the first hour's high or low. And that is set at 9:30 my time, Central Time. Okay. So this is the first hour's high. We're going to be targeting this later on. This thing, if you're taken out, let's assume you don't have a way in. VPOC migration. So what that is suggesting is everything below us and the previous location of the VPOC, which was here, is too low. We have left this distribution behind. So all this volume down here, and this was the retail price, highest volume, too low. We're now here with the volume point of control. This is saying now this is the fair price and we can rotate. Well, if I come outside, out here, it becomes a condition called mean reversion. Mean reversion is outside in trading. So if I'm got thrown out here and I'm now master of my destiny because I don't FOMO, and I don't know what'll happen. But when this shifts up, I know there's two possibilities. I can press off and continue without me, which of course can happen, or I can rotate down. So I'm looking for the down rotation to get long, to come back here and to go up to 36, which is my next target. Let's take a look at the trade. I get VPOC migration. This is suggesting possibly I may go higher. So I have to be very careful right here because the market may just run away without me here. So I have two locations now to be considering. I have this and I have that. So I'm looking for longs at these locations. Let's watch the behavior. And I have my IB stat at 930. And I think we one ticket over here, which creates a bit of pandemonium. A one tick IB typically sets up a counter rotation. So let's see what it does. And there's another thing. There's a sweep here. This sweep suggests an upside rotation. Let's just see what we get. We come down. So we got our upside rotation to there. Didn't get over the IB. We have support here, and we have an outside edge here. So for me, my trades are here. This, if it held it, which it didn't, and then outside. So let's look at the trades. There's also another trade in the Trader Lab called VWAP to VPOC. However, and we had a little conversation about this, this is not mechanical trading, guys. VWAP to VPOC is a mean reversion condition. However, here's the however. Where's the outside edge of this distribution? It is not at the VWAP. It is out at this low volume node. It's out here. So this is called mean reversion. So this is the mean. And if I come outside and I don't know exactly where, isn't that joyous? I know I want to be looking for longs out here. So, and this is high volume here. So anything around here is okay for me, but not the VWAP. Unless, you can take it, but for me, I know there's stops at the VWAP, there's stops at the mid, and the mid is aligned with my LVN. So there's my level, and there's the ETH high. So I have a confluence lower. There's the VWAP, the VPOC trade. The other thing about this is, unless you have a resting order, something I don't do, the range is too tight. It doesn't qualify. Even if this was where the VWAP was and it had alignment for a qualified long, it doesn't have range. I cannot take this trade. So for me, I don't take this trade. It doesn't fit. I have to be able to get risk neutral. So this trade is a structured trade, unqualified for me because I'm trading mean reversion, and that's out here. So let's watch. There's a sweep. Let's watch. Now I come out here. Now I'm at my location. I'm on my outside edge, and I know this is my area for my long. This is all auction based. Now I'm going to show you the trigger. So I come down here. Let's look at the order flow here. Sellers in control, having a wonderful time. Sellers Buyer tries here. Now, right here, it needs to hold this microstructure. It breaks below it. So no good. Buyers are trapped here. Sellers are still in control. Mid is here, and my LVN is here, which is my level to look for a long. And it's not a line. It's a level. Now watch. There's my trigger. Break high. So what do I know? Passive buyers are here. Buyers were here. They're under the bus. Buyers are here. They're under the bus. Sellers are below. Sellers are in control. Sellers are here. Buyers are here. When I break above this seller and this seller, and now above these guys, I now look for the pullback to get long, and my scale is going to be here. So let's look. This is the Trader Lab process right here. So right here is your long scale, and then I'm looking for the IB high, which is right here. And you don't have to scale here. If you want, since the trend is up, you could scale ahead of the IB. Either one is okay. This is structured trade in Trader Lab, and you can learn this if you're interested in it. So this would either be your scale here or there. And that's up to your trade plan. One moment. Just got to check an order here. Nivlin, I think so. Go to the bookmap.com and check the exchanges that Bookmap will work with. By the way, 36 was our target. Hold on one second here. Okay, just making a few adjustments. So 36 is the target, and that's the area. If we get through 36, we have targets above. So, and that's what this trade is. We're going for 36 on this trade. When I say 36, 36-ish. So the IB is the next target area, and then we are going for that. All these are on the price map. Where are we here? I think we're pretty close, right? So this is the target up here. So you can do the following. You could be out of this trade. Of course, that's not a terrible thing. Or you're just going to, wait on it. For me, there was liquidity came into the book right around 36, right here. So for me, I could be okay right here, actually, being out of this trade, or I'm just going to have my order here. If I can get above this, then I'm looking out here in the 40 area. But right now, this is the target area, and this is trading the auction. Hope you guys are getting something out of this. There's not a lot of trades, The goal is not to be playing an arcade game. The goal is to get long at the proper location that you have vetted, and then this long is from this area up to 36. So, that's 15 points ish. I'm good with that, plus a scale. And a couple other longs we had. So that's how you might make your day in Trader Lab. How we doing? You guys have any questions? How we doing in YouTube? This is Trader Lab. I believe I can teach almost anyone how to trade. I've been doing this 45 years. I've coached and mentored many, many different traders. I ran trading desk, and I have traders on the desk, and it was an ongoing education for them. They had to be able to justify why they were taking a trade, explain the condition of the market. Why would you take a short? Why would you take a long? Why might you not take any shorts today, unless you, unless that's in your trade plan and you have an edge under these conditions? That's a question, of course. And you could trade anything you want in any way you want. You can trade as frequently as you want. It's all a matter of finding what aligned with you psychologically, but we're not playing a video game here. Dollars are made, in my opinion, on catching the larger moves. If the market offers you a larger move, it might be prudent to take it. It pays for a lot of stops that you also are going to take because we probe the market for position. What I do is if I see a location and I'm trying to get positioned, if I put this trade on over here, I can take it, of course. And my stop has to be under here. Or I can wait for it to come down and then I can take it here. Does it matter? It matters to me because I want the stops to come out and I'm disciplined to wait for locations. This is the location. Notice how the book is being skewed. You see this? This is pressure under the book. Hold on one second here. I'm just adjusting some orders over here on my workstation. So we are looking for this. Now, it doesn't have to ever get here. This could be the high of the day. I would suspect, though, that we're going to get through this and possibly, and it's not for me to predict that we're going to go higher. So, but in the Trader Lab, subject to your plan, you could be done here. It doesn't matter if it goes higher. When you have a trade plan, the deal is trade your plan, trade your targets. And if you're into using a methodology of the auction, which is really how the market works, the market is not defined by indicators. I mean, think of it like there's a dog and there's a tail. The market is wagging the tail or the dog. It's not the other way around. And your indicators are taking price or derivative price and trying to measure it and then tell you something. Well, if you're in Trader Lab, I don't use any indicators. What do I need to know? I need to know the condition of the market or the context. Then I have structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There is no cost. You can have those. There are 60 PDFs of them. And you need, what you do is you reverse engineer them. This is what they look like. These are actual trades. And I'm not a vendor. And I just threw these together back in 2020 because traders were asking me what I was doing. And so I put together some ideas, and these are just broad strokes. This is order flow phenomenon. I was actually in a short here. This is a bracketing algo. You could learn about this if you use an order flow tool like Bookmap. There's a lot of education, very high tier, so you can understand what all this means. They raised, they pulled. What does that do? Opens the hatch. Pressure from below, lift the lid off the pot. Explosion up. I saw that, I exited. Saved myself quite a bit on that one. These are just some of the things you can learn, not only in Trader Lab, but in the Bookmap Discord server as far as how to use high tier tools like Bookmap. What is the advantage of using an order flow tool? Because I can see right here what's going on. I can see these guys were absorbed. I can see right here, that there's an auction. And inside this structure is high volume. When I break away from it, I come back and test it right here. I know this is support right here, and support is under here. I know my target is up here. So I'm still hanging out looking for my target. And I can get out anywhere here I choose and be very okay with it because there's nothing rigid. Let's watch the liquidity here. This is an algo. Let's see what he's doing. We see selling icebergs up here. I have a sweep, which gives me my counter rotation. Right here, I can be out of this trade. I have no problem with being flat right at this price versus waiting for this one because it doesn't matter to me. Does it matter to you? So, now, this is the target, though. So I can manage my trade. I can just move my stop here. I can watch the buyers are right here. Sellers are here. If I can get above this guy, I can continue. If I can't clear this guy and this stays a little blocking here, then I can rotate down. That's what I know. I don't know anything else. I do know I'm not taking a short. You guys have questions. And if you do, post them. How are you guys doing? How are we doing in YouTube? How about a thumb up? This is trading the auction. And there's our target, okay? So this trade is over. For me, not a recommendation. I have a sweep. I'm looking for a potential reversal here now. That's not a trade. In other words, I don't short this because the context is up. This is now the high, and that was the target. So I always give it a couple ticks. That's it. Trade's done. I'm flat if I was in the market. I don't give trade recommendations, and it can go on from here. I have levels above. Doesn't matter. This is Trader Lab, and this is basically trading the auction with a structured trade plan. Books on the Eli, books on order flow. Well, I think if you come to bookmap.com, I think that is the source on order flow. There's libraries upon libraries of educational material on the different aspects of this. So this is your sweep. This trade is over. Okay? And this is a structured trade in the Trader Lab. So for me, flat. Doesn't matter. So here's the question for this astute audience. If you got long, and we had, I think, a long here, right? Yeah, we had all longs going here, except for the early trade, which could have been a responsive short, or you just skipped a short and used that. This was at 9 a.m., kind of where things got a little nasty on that report, wherever that was, 9. Yeah. So we've had longs all day, and they've been great, you know. We did get kind of ripped off on this one, you know. This here took me out on my longs. So once I'm out of the trade, I either have to find another way in, and this could not get it back in here. So then you just have to have the discipline to wait for your next location, which was this. So I had to sit through this and, you know, kind of deal with my FOMO, because that's normal. And just say if it doesn't come back here, that's okay. That's what the market does. So that's the long. That's the last long was this. And then 36 is the target, right? And all these are on the, you know, before it got there, you saw that. So that's it. And it's a very potentially profitable day if you are in Trader Lab and you actually have done the work to know where your trades show up. It takes time. This is not a 3-month, 6-month process, because if you're like most retail traders, you think it's all about your indicators telling you everything. But how does an auction-based trader know that this is the target, not the high of the day? And there's, by the way, and it doesn't mean that the market will ever get here, but can you see what's going on here? Now, if you're a counter trend trader, you could sell this, and now you're looking to take the stops out. That's a different trade plan, but this fits in the Trader Lab, because if this is too high, and that's why we came back to it, possibly we can then sell this, and you have to know it's counter trend, and then you're coming here. That's your target if it's in your trade plan, but this is counter trend. Trader Lab, anybody here on the short? Now, here's the thing about the short. And if you're in Trader Lab, interesting book. So this is a Trader Lab advanced process. This is a short, and let me tell you, when you trade counter trend, it's not the same as trading with the trend. Trading counter trend, you can get trapped very easily, because this might only be profit taking. And if we're going higher, the buyers may be waiting for it. So if you come outside, this is an outside area, stops are going to be under here. So if you took a short, you have to get risk neutral. It's always job number one. Your stop would be up here. And when you get risk neutral, that means a minimum 2 lot configuration. So the first contract, so whatever the entry is where the trade fails, that is the distance you need to go to get one contract off so you can buy the stop on this one. So that gives it a chance to work. And if it comes all the way back, because this is counter trend for sure, you scratch. So this is a short advanced trade, and the target is here, which is the IB high. Now, why would the IB high be a target? Because there's typically stops down here. We also have another trade in the Trader Lab that happens at 9:30. It's called the IB continuation trade. Let me show you that one. So there's two trades here. Now, the counter trend, that's up to you. I can tell you I would not necessarily be doing it. I don't need to be busy. But let me show you this trade. Now, at 9:30, we have something called the IB, right? And I was alluding that we were trading longs earlier to take out the first hour's high. And you remember that. Well, the first hour's high is here. So when we took it out over here, it sets up a continuation trade called the IBC, or the IB continuation trade. So there's a few ways to operate in this. We have the LVN. That's the last long I talked about, or took, actually. But then we have this. When we remember what the idea was. Long here, scale there, or scale here. And then we break and we pull back. This is a IB continuation trade. So let's take a look at this. Right here is the IB. We break high. Now we have a trigger. Let's go into the trigger. See if I can do this okay. So this is the high volume structure. This is a fractal. So in the Trader Lab, we talk about you guys think of multiple time frames, right? So I don't use the clock, so I don't have any time frames in the developing intraday structures. They're not time-based. They are based on the time it takes for an auction. Sellers are here. Buyers are here. Buyers take control. So this is a auction. It's a chop, chop, chop. This here, breakaway, this is aggressors. So now I have the IB continuation trade. So it's here, right here, if you want to buy against it. Hard to do. For me, the long is here. The stop needs to be below here. And then you're going to get risk neutral. So let's just look at it from this angle. So if you took the IBC, now there's another thing. Here's volume. So this is support. This is a long entry. This is support. You can see it. Let me draw another little line. I'm showing you high volume nodes. High volume nodes act like support. So this is support. Micro high volume. Support. High volume is now here. So support, resistance, support, breakthrough becomes support, and up here is resistance. Support. See it? So now, for me, the trade's done, okay? If you're a counter trend trader, you would be trading to this and to this. If the buyers are here, then you're out. For me, there's no short. I want to show it to you because if you see a short and part of your plan is when you see shorts, you don't take them, you exit. You see, there's other ways to use a short trigger. You can either take a short, and in this context, not so good, or you can exit. But our target was this, and the target has been achieved at the moment. Questions? This is Trader Lab methodology. How are we doing in YouTube? Please give a thumb up, a like if you're finding this interesting. You're all invited to the Bookmap Discord Trader Lab community. There's that link in the bottom of YouTube. You can use that. Come over to Trader Lab, download those 60 PDFs of structured trades I've shared. Your job, by the way, is they're broad strokes, they're concept. They're things that I've created over many years, 45 years of trading that I have shared with the community. But the idea is many retail traders think it's automatic behavior. In other words, it comes to the mid, you buy it. It comes to the VWAP, you buy it. It doesn't work that way. Otherwise, we'd all just buy the VWAP and have an ATM in the basement. It doesn't work that way. There's more to it, of course. Nothing. If you think it's simple, it actually is. But what we do as retail traders is create complexity in an effort to get certainty. We actually create the problems by our beliefs that we can get certain. And we're all focused on certainty because we're wired to avoid risk. So think how counterintuitive it is to actually accept you're in an environment of 100% uncertainty and 100% risk when you don't want that. Well, how about it's not about what you want? How about adjusting what you do to the environment you're in? Isn't that really what you want? Except you believe this environment is a different environment than it actually is. And then where do those beliefs come from? They come from our primal wiring, which is our risk aversion. So we believe being safe, of course, is a good idea. We don't drive through red lights, hopefully, because we know there's a high probability of a disaster. We don't jump off a cliff because that might not turn out so good. So we avoid risk, Trading is the same thing. We want to avoid risk, so we look for certainty. That's really what it's all about. If you can understand there's no certainty, then you can't solve for something that you can't solve for certainty in an uncertain environment. You need to solve for something else. The casinos have solved uncertainty because they're in a 100% uncertain environment also. Cards coming out of the deck are random. Gamblers play cards randomly. So that's uncertain. So then how do we create certainty in a 100% uncertain environment? Isn't that the question? Well, that's called structured trades. That's what I've shared in the Trader Lab, structured trades. And most traders use the term setups. Well, it might be semantic, but a structured trade is different because it relies on a number of components. It isn't just the fact there's a mid or a VWAP over here. It's what's the condition of the market? What does the volume distribution tell us? That's the auction. The auction tells us where's the demand and what might be an outside edge. Out here, right now, might be an outside edge of this distribution. If I stay above this area in here, I can be rotating back here. So this would be what's called mean reversion, outside in trading. So if we come out here, we're going to just observe the area. It's not mechanical. Oh, it comes here, there's a line, I trade. That's not trading. Trading is understanding what creates a potential location, why it exists, and then also then knowing what you're going to be looking for because you have a vetted plan and vetted triggers. Right now, we found too high at our target. This might be the end of it. Or we're just going to rotate down, take out these late longs that are in here because there's stops under here, and then see how far out we come. The stops are sitting under the IB, which is here, and we have an outside edge. So out in here, I'm going to open this up and show you a low volume node. And what's sitting over here is an outside edge of a distribution. So why does this matter to you? Well, the last long we took was at an outside edge of a distribution, and it was down around the mid in the VWAP, right? Where was it? LVN. Let's see, where was it? Got to find it. It's down there. This is our last long, which was here, LVN. So now, and what was an LVN? Let's look at this. This is how the auction works. Outside edge. Well, now we have another distribution up here, right? We left this behind, and maybe, we don't know, this might be too low. So if I come outside to this outside edge, and it can be in here, it's not, it could be there, it might be here, it can do anything. So that's not our job to predict it. We have an area. So if this rotates down, I already know, because I have a trade plan in the auction, that if I come out here and get some stops out and I find buyers, I can at least potentially, and I always got to say potentially, mean revert and come back to the high volume. So I can get out here, to scale here, and then back here, and then maybe out the top, or maybe not. So that's my next trade, and it's not a recommendation. Do you know where your next trade is, potentially? Or are you waiting for some oscillator to cross over, something moving out? Well, I don't know. Whatever it is, where is your next trade? Well, my next trade is potentially out here. And if this fails, then I may just sit back and wait. So this is my next trade. If you're in the Trader Lab, and it's about areas of behavior. I know this right here. So I have this and maybe a little lower. I can come under the IB because there's going to be stops here. So I can come down to here. So this area is my next area for a continuation along. And in the meantime, unless I'm a scalper, which personally it's too much trouble, too much wear and tear, this is either a short to there or you're just out. And that gets us current. Now, do you have questions? Why don't you post them? By the way, if you're interested in what we do in Trader Lab, use the link in the bottom of YouTube. I can tell you I've coached a lot of traders over the years. And when I was on a desk, basically traders on the desk had to come in prepared. They had trade plans. They had to be able to explain why one scenario over another, or why both scenarios. This is what trade plan is about. When you're in the Trader Lab, it's all the work is done outside of the market hours. So you just basically come in with your plan and you wait for the trade to come to you. It's like a bus. So it's not about, should I get long here? Should I be getting long right here? Well, maybe, but I don't have a trade there. I don't have a trade until out here. So suppose this is as far as it can go down here. Then I don't have a trade. I just sit here and I'm going, well, that's not my trade. It's like a bus coming by. Where's my bus? My bus is out here, not here. This short, this is support. So I know it's support. That's why there's a line there. The support came off of these buyers here and here. When I come back here, this is support. Now, support doesn't mean I buy it. It just means it's support. So, and this is resistance right up here at the moment in a intraday developing time frame. So let's look at this. If this is too high, there's my resistance. If this is too low, there's my support. Resistance, support. And where did this come from? That volume, that node right there is high volume. Think of this like shopping. The way I mentally kind of put this together, and I had I think, trading is so different, that for me, I had to start relating to something I was familiar with. So for me, it was shopping. The auction is a shopping experience, and it happens in all fractals and time frames. So it's always going on. And what the market's trying to do is figure out what's too high, what's too low, what's retail. So if this is too high, and there's my sweeps, and don't forget my targets right there, right? So we hit our target, and I break low, and I pull back. This is resistance. So now I have resistance and I have support. The support's coming out of here. Sellers were here, buyers were here. See the buyer here. Support's there. Resistance here. Break, resistance there, support here, and if I get lower, support. So for me, I don't have a trade. If I'm looking for one, which I always am, that's vetted in my plan and alignment, it's out here. I do not want to buy this. Doesn't matter where it goes from here. I have to be okay with that. That's support, but I'm looking for something with more range. So I have to just sit here and not do anything. So resistance, support. Now, if you look at this, let's look at the behavior here. So this is now the trend's up, right? So would you be taking shorts or would you be using this? How would you use this, you see? So for me, it's only longs today. I don't know where the high of the day is. This is very important. My long trade is done. I am, let's just say, not in any position now. Doesn't mean I won't take trades. And it doesn't mean the market won't keep going because we have other targets up above. I mean, we can theoretically get up here. If we get up here, this could accelerate. So that's another thing to be conscious of. Now, if you're sitting here and you're going, I should have bought this and I should have done that, that's the wrong conversation to have. The conversation you should be having, in my opinion, is what should I do? And that's all I do. And where do I do it? Well, you do it here. If this is not your trade, then there's nothing to do. You observe it, but this is resistance. You need to be able to enter. You're not going to be entering here. You might enter here. Does that make sense? How are we doing in YouTube? Please give a thumb up. If you have any questions, please post them. I'll do my best. And if you're in the Bookmap Discord Trader Lab community, post questions. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot. Another thing I recommend, and I strongly recommend it, is that traders get the free recording software, put on a pair of headphones, narrate the market, go back and listen to yourself narrate what you think is going on. Why is this resistance? Would you know that? If you're in Trader Lab, you would. Why is this support? If you're in Trader Lab, you would know that. Can you, if you get an understanding of market mechanics, can you do something with this? Now, remember, we were talking about a short not qualified. Where is it? Well, it's there, there, and there. Not qualified. Where's the longs? This is a long, not qualified. So I have nothing. My trade, if it shows up, is going to be in this. And it doesn't mean I take stops, so let's get over it. What is a stop? It's no different than the casino paying a gambler because the gamblers win. But the casinos only play games that have an edge. And over time, they extract the dollars from the gamblers, not necessarily the last hand or the next one. It's over time in a random distribution of outcomes in a 100% random environment. We are looking to make this something other than it is. And that's why you spend your life tuning, tweaking, and curve fitting, trying to get repetitive behaviors. The thing is, every moment in the market is unique, and the market does tend to repeat in some ways, but not on your schedule, and it does it based on the perception of the participants, not on an indicator. Notice the behavior. 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 This is auction-based processes. You can learn this And it doesn't mean you are getting long here and selling there. When things get aligned, you have the range, you know how the market works, you know if we come outside that we have a good potential to come back in and mean revert. This is called mean reversion, and then potentially come out the top or not. You would learn all this in Trader Lab if that's something you're interested in. This is actually the language of the market. The market is speaking. So when you use your indicators, and I know I probably sound like I'm against them. I'm not against indicators. What I'm kind of campaigning against is retail traders who think that with an indicator they're going to solve what they need in order to potentially have a business. Indicators don't provide the solution; they're actually part of the problem, because it's when they're appropriate and under what conditions. What condition would you be taking longs only? Would that be today, or would you be taking longs and shorts? When would it change from longs to shorts, or both ways? The indicator does not give you that understanding of the market. Most of us with indicators are put all our energy into getting indicators to translate. And that's natural, by the way. But that's not where the business lies, in my opinion. The business lies in understanding how the market works. Why does it do this behavior? Why would it come back here? Why was this been on our price map since we were up here back in December? Well, here we are. If you understood how the market works, you would know why this was a target today. And we actually yesterday had a target of 6,100. If you were following, well, the stream didn't run yesterday, but 6,100. Let me show you that target. This was our target for yesterday on the longs. We didn't quite get to it. I think this is yesterday's high. And then that was it. Then we opened in the RTH, I should say the ETH. We tested it. Here's the ETH low and our ETH high, and we're above this, and our RTH open is above this. If we're above the 61, that sets up the next one up, this one. If I get through here, I've got other targets up here, possibly. Well, we'll see what it does. We take it one step at a time. Does that make sense? This is the auction. This is how the market works. Now, it's not a predictive process. It's a maybe process. Maybe it'll do this. Maybe it'll do that. And depending on what it does, we know what we'll do. That's the Trader Lab, because you have a trade plan. Support, resistance. Are you guys tracking? Yeah, Bruce, if you have a problem joining the Traders Lab, you need to confirm your Discord email. There's you go in there and you can get in there, and there's a join, and then follow the directions in the join, and then you should have no problem like everybody else. Look forward to meeting you there. How we doing? Is everybody tracking? Please give a thumb up in YouTube, give a like. If you're interested in what you're seeing here, you want to learn about how the market works, why it does what it does, how you might get in alignment. And the thing about Trader Lab, guys, Trader Lab, there's no secret sauce, you know. There's no love potion number 9. Remember that? It just doesn't exist. There's no holy grail. There's no one indicator you need in that secret thing. It's all over YouTube and the internet and all the quote gurus and internet hotshots. You know, don't bother. Just don't waste your time. Trader Lab's free. You can learn, in my opinion, I can teach anyone how to trade. They have to do the work though. And you have to be psychologically attuned to this and be able to manage your emotional states. The biggest challenge you're going to find in this business is not learning how to trade. It's going to be actually doing it and dealing with your emotions. We are really under control of our reptilian brain, and it does a great job protecting us out in the planet. But This is like being on Mars. We have to run into the burning building and take risk in order to obtain opportunity. Notice where the support is. Sorry. This suggests an upside rotation here. So if you understand how the market works, then you'd be waiting for locations to interact with it that you have vetted. So what this suggests here is an upside rotation. Now, that's a sweep, so I don't know if it'll do it, but I don't have a trade here because I see this. I have resistance, I got support. If this only goes here and breaks down, then I'm going to be looking out here. So for me, I'm still looking for a potential long, but it can't happen until I come further out. And that location might be here or in here. So I want you to know this is my location. I don't know what I'll do here because I can't do anything until I get a trigger. If I get a trigger, I put the trade on, I use order flow to read what's going on, and then I take a stop, or I get risk neutral and take a stop and scratch, or I get risk neutral and then manage the trade, go on to targets. That's it. There's nothing more to this. It's just knowing where your trade will show up and then what's the trigger. And that's the kind of stuff you learn in Trader Lab. You just have to keep it real. Yeah, you're welcome, DB. What needs to happen to look for a short? Well, for me, I don't have a short buy at the moment, but for it to be a short, I would need to fall out of this distribution and then come back inside. And even this is a short, but you have to be thinking about it this way. If you took this short, which we've been talking about, it's a counter trend trade. When I trade counter trend, I'm really more like a Subway purse snatcher. I know I can get that there's buyers in here. I also know there's sell stops, and I know they're under the swings. So if I take a short, I'm trying to trade into the stops, but it's a little more advanced. The other way to do this is just only be taking longs so far and look out in these areas here for continuation to rotate back up. If I get that, that would be my trade. Now, if I fall out of this and I leave all this behind, then I can continue lower. And by a short, it's only, the context is up. So for me, shorts are not high on the parade. They're just very much, I don't pick the high of the day. I mean, I can trade this because I can, I can read this because the order flow and the auction are telling me that we're going to counter rotate. So my choices are take the short, try to trade into the stops, which I know are under the swings. Everybody does the same thing. Retail traders are lemmings. They all do the same thing. It's not a bad thing. I have a saying, think like a retail trader, don't act like one. What do? They all have their stops in the same place. What might I do? If I'm a counter trend trader, I take a short into their stops. I'm then looking for a long out here. So I could just be scalping this, not my trade. Why do I want to mess around with 4 or 5 points? It's not worth the wear and tear on the mouse. So for me, I want to see what happens out here. So this is a structured trade. It's called mean reversion. And the way this works is we might accept at the moment, potentially the trend is up. Okay. If the trend is up and this is too low, and I've left it, and now I have another distribution up here or auction. The outside edge, which is a swing low, which is where the stops are going to be, is under here. That's the outside edge, low volume node, and in here. So when I come out here, I do not want to go running merrily in front of this because I've got swing right here. So I want to see it come out and possibly rip some stops. And then I'm going to be using the stop and iceberg detector to try to read exhaustion and, go from there. Remember, resistance, and then there's support is there. There's my support. And it doesn't mean we're not going lower. because I'm looking at the swing low. So I know I have support here. I have nothing to do. If this is the low, doesn't matter. It's not my trade. So remember, and these are not trade recommendations. So I have to sit here and just work on my crochet, be patient, and be a professional trader, not playing a video game. And if this thing right here goes from here, comes out the top and keeps going, and I'm not in it, I'm successful because I have the discipline to follow a plan, not to take trades in the middle of nowhere because I think because of FOMO. So I don't have a trade. Because I could get rotation here. I can come here or even back to here and fall. I could do anything, right? So I have nothing to do. Please ask your questions if you have them. There are not a lot of trades today, but I don't know how many trades you need. The idea, in my opinion, is profit, not action. So if you're interested in that, come to the Trader Lab. You can learn. Well, DB, you want to use GAN? That's fine. Yeah, I studied GAN years ago. All of that stuff's all very interesting. But the idea of predicting anything in this business is illusionary. So, and that's why we all like Fibonacci and we all like Elliott wave. And, I've done all those, of course, and tons more, because we're looking for a sense of certainty, but it doesn't exist. So when you remove all of these superfluous inputs, you can get down to more of a basic understanding of what's going on, and then you can participate based on that. So I'm not looking at a Fibonacci extension or retracement. What does that matter to me? I'm not looking at any of that, or Elliott wave, which is really the same kind of a thing. You're still using extensions. So it's got fib involved in it. So why would I know this is support? And but I don't have a trade here, you see. So I know it's support, and I know I got resistance over here. And this right here, your trigger comes in over here to go there, but I don't have a trade, so I don't have a trade here. But I know the levels. And the levels are not based on an indicator. They're based on the behavior of the participants. So I have a level there, which is where I would like to be a buyer in this area or even under here. It doesn't matter, an area, but I do not want to be getting long here. What's under here? Stops, stops, stops. So retail traders are going to be bringing their stops up here, up here. That sets up that if I get a rotation down again, I have fuel under here, and that can take me down here. When I get the stops coming out, that's what I want to be looking at. I want to be looking at excess, get the weak longs out. And if I come outside somewhere in here, and I have support over here is my other area, it's right there at this high volume. So my outside edge is here, and I can pop to here also. So this is my area. I'm looking for long to there, out the top. That's my trade, not a recommendation. I may run out of time before this thing ferments, and this is trading. So I want you guys to know what my trade is. And I also want you to know that if it doesn't show up or I don't see what I need, I won't take it. The other thing is, if I do take it, I can take a stop as well as anybody else. And I've taken more stops than I can remember. And it's always an unpleasant experience emotionally. But in the business, it's cost of production and overhead. So in Trader Lab, you start looking at this more as a business, not as a video game or the need to be right and predicting and all that nonsense. That's really retail trader. That's what the retail traders do. That's why they don't have longevity, in my opinion. Trader Lab is really about developing a business and understanding the business of trading, and then getting rid of all that other stuff that is really more problematic and is also random. What's important to understand is why levels matter, why a level matters, not that it's actionable. It can be if it's part of your plan. This is not an actionable level for me. It is support, but not just because it's support. What I like to do is I look left, write that down, because where's the swings? Where's the stops? All the stops are under here at my outside edge. So I want it to come out so I can bring it back and do mean reversion. So outside, back. Remember I was saying shopping. What is going on in an auction? This stuff, this is an auction. What creates this? An auction. Why is this like shopping? Because if this is the high volume and it's right there, and the market went, I'm not paying that, this is too high, but the buyers here absorbed the selling, the inventory, and said, no, but it's great. And then when we come up here and we have our buyers up here, but I get a sweep. I get my icebergs here. Now, I don't know. I have a sweep here. What's the difference between there and there? How about there is no difference? Except this is suggesting to me a reversal. That's how I use this. So I know I'm looking for a reversal. This is my reversal. There's my reversal into support, into resistance. Let's just keep an eye on this. Resistance, support. You see this? Now, I'm looking for it to break one side or the other. Now, because there's stops under here, I'm looking. Well, looking means anticipating, not predicting for this. So I think I'm going to run out of time before this thing comes to fruition. So my trade, and guys, this is not a recommendation. You don't want to take my stops, you know. And I take them. I'm looking out here. And if I do get along, I'm coming back there. That's the mean. So it's mean reversion. So it'd be outside, back to there, and then out. Or back here. And then, so if it's a 2, you're looking for to there, and then maybe there, test the high of the day or out the high of the day. That's up to you. But it's initially back here. So this is the target for a scale, and I usually give it a tick or 2. And then you're either managing for a new high or you're exiting here, and that's the trade. The trade would go from bing to bang. And that's just one trade. If it doesn't have enough range, you don't trade it. It's all a function of plan. It's not a function of keeping busy. I hope that makes sense. You're not here to be busy. You're here for the opportunity for profit. And you don't do that by playing a video game. Actually, you can have another computer running on the side if you want to play a video game, but this is not a game. We're in the business of trading. If you're interested in the business of trading, come to Trader Lab. You can use that link in the bottom of YouTube. Download the 60 PDFs of structured trades that I share here in the stream. What I'm sharing with you, some of this, you can learn this. I believe anybody can learn the trade if they do the work. Doesn't mean you'll be successful. I always have to say past performance, not necessarily indicative of future results. Many traders that come to Trader Lab have changed their outcome. Not everybody will. Not everybody's going to do the work. The work is, quote, not the fun part. You know, it's the work is all done outside of regular trading hours, and then you bring it here, and then when it shows up, you put your trade on. You know what you're going to do before it happens. If you're making it up, then you're just playing a game, and that is not sustainable, in my opinion. Remember, this is where I'm looking to get long, and if it doesn't get under support, then I can roll back up. I have no trade. Final questions. I got a couple minutes left. And remember, use the link in the bottom of YouTube. Hit the like. Subscribe to the channel so you get notifications. And remember, DB, you're asking me about eSignal. Yeah, I used eSignal for years. Also, IQ feed e-signal. Yeah, I did. I can't remember. It's a long time ago, though. Most of the time I was running CQG over the years. Edgar, I don't use market orders. I'm getting a question from Trader Lab. Do I use limit or markets? I use limits. Now it doesn't mean, I mean, I can put an order right here if I wanted to, which I don't want to do anything, but I could put it, let's say I wanted to get short, I could just throw a limit right here and I get filled, you know? So I'm using OCO orders all the time because I want my stop and my profit targets put in. Notice what the market's doing now? And where's the stops? Under here. Where's our trade location? It's going to be out here. And it could be down here. It's in this area. So then I'm going to be looking. So why would I not get long here? Well, the reason is all the stops that are sitting under the swings. That's why. So if you're in the Trader Lab, you would know because we drill these concepts and you have to remember, think like a retail trader. Don't act like one. Retail traders really never get to the place where they get past all the garbage so they can actually learn the trade. They spend their time with time frames and indicators looking to predict what's going to happen. It doesn't, well, I can't say it won't work for you. I just don't know. Really haven't met anybody who just uses indicators. I build systems. You might say that was indicator based, and everybody has winning trades. The fallacy of this business is you could do anything. You could do nothing and have winning trades. So does that make you a trader? No, it doesn't. We all have winning trades, even if we're losing traders. So what does that mean? It means there's randomness in here. And if we're in a random environment, we have to solve for randomness and uncertainty. So, and we go down, that's what Trader Groundhog Day is about. And I did a webinar on it. It's available in the Bookmap Discord Trader Lab community. And that's when you're working hard, tweaking and tuning, adding indicators, multiple time frames, trying to get the right quote fit. Now, what is fit? Optimization. Curve fit, well, means garbage. So unfortunately, that's not going to work because you're trying to put the market in a box. So when the quote same situation shows up, it'll repeat. Well, that's real nice in theory. And sometimes it does and sometimes it doesn't. But the market today is not even the market yesterday or the day before. They're all unique. So it is not about trying to get your indicators to catch, and quote, tell you what's going to happen. It's about really understanding where it might happen and why. And maybe today is only longs. And maybe today, the place to get long is going to be outside somewhere, not here. I hope that makes sense. Please give a like. I'm out of time. If you have questions, please come to the Bookmap Discord Trader Lab community. There's that link in the bottom of YouTube. It's absolutely free. It's a community of like-minded traders that have come together to leverage their collective experience. Senior traders over 50 years trading. I've got 45, both professionally and otherwise. I believe I can teach anyone to trade, but that the trader has to really develop and put the time in. This is not a 2-month, 3-month process to build a business. If you want to be in a profession that's very competitive, you're going to have to think differently and put in the work. Those of you who know me, I just was down in Costa Rica for a month and a half. I'm back in Chicago in time for 0-degree temperature. Very exciting. And then I'm going back to Costa Rica to trade from there. Trading offers a lot of opportunity. And I think if you're going to invest your time and potentially dollars, that you give yourself the best opportunity to learn what the potential reality of this business is and maybe build out a business with longevity. And of course, you have to do the work and your mileage may vary. Past performance, never indicative of future results. But use the link in the bottom of YouTube if you want to visit Trader Lab. Be sure to give a thumb up on the way out. Thanks for stopping by today. And I look forward to seeing you guys tomorrow.